Welcome, everyone. Today, we're here to talk about Magnifi by Tiffin, a marketplace where you can harness real-time proprietary data to help individual investors and professional advisors identify the best performing stocks, ETFs, and model portfolios to grow and preserve your wealth. I'm Melissa Francis. I know a little bit about this. I'm a former CNBC, MSNBC, Fox Business, and Fox News anchor. And right now, there is probably no hotter topic out there than crypto. You guessed it. Joining us is Anthony Scaramucci, founder and managing partner at SkyBridge Capital. Anthony, thank you so much for joining us, my old friend. It is really good to see you.
Nice to see you, Melissa.
Let's talk about inflation. Goldman Sachs came out with a note earlier saying that they think inflation is going to be even worse than feared, which is kind of amazing because I'm already pretty afraid of inflation. What is your take?
I have the opposite take. I could be totally wrong. Obviously, I'm more in line with where the central bank is. I think that there are tremendous transitory issues. I don't think inflation is going back below 2% anytime soon, but I think we've got probably one more quarter of nasty inflation numbers. But as the supply chain resets itself and the U.S. economy in particular, the global economy en masse, but the U.S. economy in particular starts to normalize, you'll see those inflation numbers come down. And remember, you and I both know, because we've watched this over 20 years, everybody outsizes their inflation guess because they misestimate, if you will, the deflationary forces of technology. And so one of the major deflationary forces is the blockchain. This is a huge delayering mechanism. And as you delayer and disintermediate and take out third parties from the equation, you're going to dramatically reduce prices. We have AI. We have the introduction of 5G nationally and globally. We've got, of course, the autonomous driving cars. All of this stuff is on the horizon. It's going to push prices down. So I think that you know, and I know, that we have a tendency to see what's going on right now, and then we think linearly and we say, okay, well, that's going to happen next year as well. I don't think that's going to happen. I think we're going to be surprised at how quickly these inflation numbers drop.
I love your points about crypto and especially blockchain, and we're going to be talking about that a little bit more later, but that was a great perspective. How do you tie that into the Fed? I mean, of course, everybody's been waiting in the next couple of weeks. They think the Fed is going to tighten, although I don't know with everything that's going on in Russia. What are your thoughts on the Fed?
Well, again, we have to put it in perspective for everybody. Let's just call the 10-year right now, for the sake of argument, roughly at 2%. And the inflation data is somewhere around 7.5%. And so you have minus 5.5% real rates in the United States right now, given those numbers. And so if the Fed, and Jerome Powell's already indicated this week, that he's going to raise, and he's calling for a 25 basis point increase this month, I think that's a scant increase. Moreover, people like my friend Mohammed Al-Arian would have argued that they should have gotten way ahead of it. I've argued the opposite. There's still tremendous slack in the system. There's a lot of people that need to get re-onboarded to a more normalized economy. And I think in retrospect, and people look back on this, they'll say the Fed did a very good job. The big issue for everybody is the dollar volume that's in the system right now. Remember, we've got a $9 trillion Federal Reserve balance sheet. Since April 1st of 2020, we've increased the monetary supply. So this would be measured by M2. By 42%. Okay, so that's an astronomical increase in the amount of money that's in circulation in the economy, Melissa. And that's one of the main reasons why we've got the inflation coupled with the supply chain disruption. So he's going to have to start taking that money out of the market. He was doing that successfully in 2017, 18 into 19. The market did correct as a result of that. But I think that the good or bad news, however you want to look at it, the market's already corrected. So the market's pricing this stuff in. I think JP Morgan or one of the big banks said it's going to be 7 or 8 rate increases. That's only 2% increase, frankly, if you're going at 25% a piece. But my prediction is going to be less than that. I think the overnight rate by the end of the year will be probably 1.25%. I don't think it gets to 2%. And I think these numbers come down. Our big issue right now is going to be how are we going to resolve this existential crisis that's happening in Europe, because you don't have to read the Guns of August to know that one mishap could lead to World War III. You know, we're over the line now in terms of where we need to be. And you saw the nuclear plant explosion. God forbid if that led to a meltdown of that reactor. That's the largest nuclear plant in Europe. And, you know, the wind could blow a certain way. Many people lost their hair in Germany in 1986 as a result of the Chernobyl disaster. Just imagine the wind blowing and heading it towards China or heading it north to Russia. You know, this is the stuff that happens in war. You're planning one thing, and then the theater of war changes your plans and things become catastrophic. So I'm more worried about the war than I am the inflation.
Those are great points. You made a decision after your stint at the White House to pivot SkyBridge, which had been a successful fund of funds, seeding hedge funds, to crypto. Now, why did you make that decision then?
Well, you know, listen, when I got fired from the White House, I had written down on my notepad that when I leave, I've got to go back to SkyBridge and buy the website, skybridgebitcoin.com, because I had had a few meetings at the XM Bank. People don't remember this, but I was the chief strategy officer at the XM Bank for a period of time. And Treasury officials had come in to talk about the digitization of the dollar. Ultimately, Secretary Mnuchin made the decision not to press forward with that. But I thought, wow, just the notion that the United States, that has the reserve currency, is thinking about dollar digitization means that there's something way more to the blockchain than my traditional finance friends and executives thought. I did think I was going to last longer at the White House than a carton of milk in the refrigerator, Melissa, but that's for another day. But so after I got blown out of the White House, I immediately bought that website. And then I said to my team, we need to do a lot more work on the blockchain, which we did. And then I put a checklist together. I said, if Bitcoin can get to 100 million wallets, which it did in October of 2020, if Bitcoin could be stored safely in cold storage, I wouldn't have to worry about the hacking of the things that like took place at a Bitfinance, as an example, or Mt. Gox. And then the third thing was regulation. And so I got very comfortable with the first two. We store our Bitcoin at Fidelity and NYDIG. The 100 million wallets, at least according to Glassnode, is now 240 million wallets. And ultimately, I made the decision, rightly or wrongly, that this would be fairly regulated in the West, primarily because the IRS said that Bitcoin was property. It's treated on your tax return as intangible property. And one of the great things about the U.S. Is real property rights. Real property rights are sacrosanct in this country. They date back not to the origination of the United States, but they go back 900 years to British common law. And it's very hard, very difficult to take property away from citizens once it's been deemed property. And of course, with that, you have the right to trade that property. So, you know, and then I got, you know, obviously the Bitcoin futures, October 6th of last year, indicated that it's going in the right direction. I predict before the end of the year, you'll have a cash ETF trading in the United States. You already have them in Europe. You have several up in Canada. So those things, once the criteria was met, SkyBridge put about $250 million into Bitcoin and Ethereum. We own other coins now like Algorand and Solana. We still have our fund of funds business. It's a very robust, successful business. But I do think that the world is moving in this direction, and I don't want my clients to miss it.
So your crypto funds, First Trust Bitcoin Fund, First Trust Ethereum Fund, and First Trust Crypto Fund, they were originally a hedge on inflation, but over the past year, of course, Bitcoin has acted more like an over-the-counter stock than a hedge on inflation. Did that change the way your strategy or change the way you looked at these assets at all?
So, you know, it's interesting because, you know, Secretary Mnuchin was interviewed recently, and he said, you know, is Bitcoin an inflation hedge? And he said, no, he didn't see it that way, but he felt that there were use cases for Bitcoin. I have never said that it was an inflation hedge. In fact, when I've been on TV or an interview like this, or in my writing, even the book that I wrote about Bitcoin, that I do not see it in its current state as an inflation hedge. I see this as an early adopting technological story that is mirroring a lot of what happened in Web 1. And I'll just give this very quick example. Amazon went public on May 15th, 1997. If you and I were smart enough to put $10,000 in Amazon on that day, it's worth $21.4 million today. However, we would have subjected ourselves to 8 periods of time where Amazon dropped 50%, one period of time, frankly, where it went down 90%, but we would have had to ride that volatility to get to where we are today. And very few people have the stomach for that. But that's where I see Bitcoin. Bitcoin has 2% or 2.5% right now global adoption. It's an early technological adoption story. It is not yet an inflation hedge. Could it be one? Yes. Melissa, if we get to 1 billion plus wallets and Bitcoin's trading at $500,000 a coin and it's stable and it has way less volatility, yes, it could be digital gold, but it's not that yet, any more than if you and I were logging onto the internet in 1998 and we were waiting 35 seconds for our homepage to come in, and I turned to you, I said, hey, Melissa, someday you and I are going to be able to stream 4K movies over the internet, but it's not just going to be you and me. It's going to be hundreds of millions of people around the world. We would have looked at each other in 1998 and said, are you kidding me? I have this dial-up modem and this AOL account. That's not happening, but of course it did. So I just want to remind people about how exponential progress works. We'll be sitting here. Bitcoin will have 1 billion plus wallets and growing. And hopefully you'll interview me at that point and I'll say, yes, this is an inflation hedge now due to the saturation, the value, and the lack of volatility. But we're going to be at least 5 to 8 years away from that.
So let me bring it all together then. You've made a lot of really great market calls when President Trump was elected, not just because of your relationship. You said that you thought the market was going to take off. By the way, I was on television all night that night until the morning, and I said the same thing when the market crashed. It was a screaming buy on that morning. Of course, you were right. I was right, but you had skin in the game. Crypto, of course, is down, I don't know what it is, like 30% from its high, something like that. But if I'm just an average investor, have I missed that class? What would you do right now? If you weren't in it at all and you were listening to this, what would you do?
I would buy some is what I would do, but I would also average in. The only way you can handle a technology like this is to dollar cost average in. You said something interesting about the Trump election. I thought it would be insane that the market wouldn't go up. Okay, whatever I think of President Trump personally and whatever unfolded between me and him, he had pro-business policies that he was going to put in place that was going to directly affect the market. If you cut rates and you remove the rates from 35 to 22%, you're increasing earnings by about 40%. And so therefore the market should go up by at least 40%. And of course, all those things started to unfold. I think this is a different thing. This is early adopting technology. This will be very volatile. There'll be periods of time where Bitcoin will crash down 50+%. But if you're willing to zoom out and look at the long-term chart and look at the adoption story, could Bitcoin get to $500,000 a coin? I believe it will. Could we have a lot of steps and starts during that period of time? I think the answer is yes, and I can prove that to you, whether it's Facebook or Amazon or Google, or you pick the stock story. Incumbent in those stories was lots of early stage volatility. Let me just leave you with this one thought because I think it's important. If we were talking about Facebook a decade ago, where it had 240 million users, and I said, Melissa, someday Facebook and its counter subsidiaries like Instagram collectively are going to have 3 billion users. Just imagine, okay? And that's very short period of time later. A lot of people would have looked at me and said, it's never going to get to 3 billion users, but there it is. Take a look at the Facebook stock chart. Now, it got hit recently, but I still think Facebook's best days are ahead of it, and so are Bitcoin's.
To that point, one of the most interesting stories I've seen in the past couple of days about crypto is how it has played in the Ukrainian war effort. The country put a call out. More than $52 million in donations came in. I think it was as of last Saturday, but you contrast that with when governments are saying, oh, we're going to send you money. It might get there in a week. But instead, here comes technology, here comes crypto, and the money starts funneling in to help the Ukrainian side. What did you think about that?
Well, first of all, I would say thank God for that. Secondarily, the critics of Bitcoin that are saying, well, now the Russians are going to use it to get around the sanctions. They don't really understand the nature of it and how easy it is to track the wallets. The Department of Justice does understand that. They were able to get back several $billion that were stolen in the Bitfinex thing the minute they tried to spend that money. They were also able to get back some of the ransomware on the Colonial Pipeline situation related to Bitcoin. And there's a great white paper by Mike Morrell, the former CIA director, acting CIA director, about how there's a misnomer out there that Bitcoin's good for illegal activities. It's actually not, because it's very easily traceable. But I like the story of the instant money going to the Ukraine. And I think that is the future. You know, we're talking about Rayo's. They only take cash at Rayo's, but most other restaurants take American Express or Visa. Just imagine you and I going to a restaurant that takes a credit card, but someday I can take out my smart wallet and my smartphone. I can direct value to the waiter into the smart wallet of the restaurant, and I just bypass the 3% fee that MasterCard, Visa, and American Express charge.
But can I ask you, let me ask you a quick follow-up though, because you say that people don't understand how traceable it is. And of course, the average person who's listening about crypto and everything else, the value of it is that we have been taught is that it's not traceable, that's why people use it, because there's freedom. So explain to us why it is traceable and people don't think that's the case.
I don't think that's the value, but again, everybody's got a different view of Bitcoin. I think the value in Bitcoin is that it is a direct circuit of transferability. So you and I can transact with each other. We don't have to know, like, or trust each other. But because of the forces on the blockchain, the technical prowess of the blockchain, we both trust that. So I can send value from my wallet to your wallet. It goes unhacked and secure, and that transfer is made. So that delayering, that cost savings, me not having to bypass through a third party, I think is where the value is. Your wallet is known. My wallet is known. Every single transaction that's ever happened in Bitcoin is on the ledger. It's on the open source ledger of Bitcoin. And so it's very easy to trace this stuff. So people that think that it's not easy to trace or things like that, I don't know where they're coming from on that. If you said to me, well, that was the case, say 2009 to 2014, I'd say, okay, it was a very small group of users at that point. Maybe it was used for Silk Road purchases or for drug purchases, but it's just too scaled now, and it's too available for scrutiny by the regulators. I want to make this point because I think this is also a very important one to think about when you're thinking about Bitcoin. If I can send value to you without a third party, I can save a ton of money. Let me give you the El Salvadoran example quickly. Many expats here in the US, they want to send money back to mom and dad. They're underbanked. They may go to a Western Union office and say, here's $1,000. Could you please send it to my mom in El Salvador? They get whacked anywhere from 7 to 9%. And so mom gets $920, $1,000 goes into the system, $80 goes to Western Union. Well, because they now have Bitcoin as legal tender, Melissa, the Department of Commerce in El Salvador expects a $400 million savings by expats giving money back to their family members in El Salvador, bypassing Western Union and just going wallet to wallet transfer. And so I think that's where the opportunity is. And I think that's ultimately where the future is going to be in financial services.
And one of the words that you mentioned in there, blockchain, is so important because it's not just talking about transferring money. It's also how people can access data. I mean, blockchain really leads to the democratization of asset classes. Talk to me a little bit about that.
So, I think you're saying it better than me, actually, but I mean, I'll just give examples of the blockchain is an empowerment mechanism because the underbanked right now, why are they underbanked? They don't have enough money to beat the fees at the money center banks or the regional banks. But if they had access to Bitcoin and the blockchain, they could effectively be their own bank. And so just imagine the power of that, and imagine the commercial activity. If you're talking about the stock market as an example, let's talk about transactional savings. If I'm going to trade my stock and it's going to end up in your account, it goes through 7 entities before it arrives at your door. But over the blockchain, I'll be able to trade directly with you, and you'll see real time, within hours of settlement. Maybe we're T+1, or I guess I'm on stocks T+2 at this point. But you'll get to the point where you have almost instantaneous settlement. And again, think of where we were downloading that homepage in 1998, and think of all these people watching 4K television today. These advancements are going to come very quickly, and I don't want my clients to miss it.
You talked about the regulation piece a little bit at the beginning, and you talked about property rights and how that figures in. Where do you think regulation of crypto goes from here?
Well, obviously, we're in a political society. Gary Gensler has made a decision that it's important for him to be tough on crypto. He understands it about as well as anybody. He took and taught cryptocurrency courses at MIT. I think that it's misunderstood. Somebody like Elizabeth Warren, as an example, should be for it. She's a supposed progressive. She's for championing the idea of helping people that are underbanked. She's railing on the big banks, but then she's also railing on crypto. It doesn't make any sense. But then you realize she has socialist tendencies. She just hates rich people making more money. So that's why she's railing on it. So nonsensical. So I think over time, what will happen is the cooler heads, the more rational heads will win out. I don't think the United States wants to cede its leadership in financial services. It's at 150-year leadership. If they make a decision to disallow or to overly regulate cryptocurrencies, you're going to see capital and intellectual flight from the country, and you'll lose this great opportunity to create jobs and this great opportunity for it to maintain the power of the United States as a financial services center. So for those rational reasons, I think it ends up getting appropriately regulated. We need to track it. We need to regulate it. But we don't need to get in the way of it. We need to allow for these delayering mechanisms to happen, because that's where the deflationary future is, and it'll just lead to more productivity and more prosperity.
Okay, so for those in our audience who are sold, what % of your portfolio do you think that you should have in this type of asset? And how do you dip your toe in if you're not already in?
So again, I would just pick a number that you're comfortable with and buy a little every month. And so I don't know if that's, for me, I read The Richest Man in Babylon by George Clason when I was 24 years old. And in the book, it said, give 10% of your money, whatever your net paycheck is, give it to yourself, pay yourself first. And so I've practiced that for 30 plus years. I would tell people, take a little bit of your paycheck and buy. You could buy things like you mentioned, the SkyBridge
10%?
No, not 10%. I would say 1 to 4%, something like that. I put 4% of SkyBridge's money in Bitcoin. If you talk to me at the peak, it ended up becoming 22%. I had people, mostly propeller heads from Wall Street, traditional finance people, upset with us at the size of our Bitcoin position. But as I pointed out to them, I didn't add to it. It just happened to grow. And to quote one of their messiahs, Warren Buffett, why would I trade Michael Jordan for 4 scrubs and call it diversification? So I kept the Bitcoin position on. It's traded down to about a 15% position. But remember, I started with a 4% cost position. So to me, it's 1 to 4%. You can wade into it by making monthly purchases. And this way, as the market's oscillating, you'll catch it and your dollar cost average will be a good number. But I think you got to be a part of it. I think it would be a mistake to be underinvested or zero invested in the blockchain and cryptocurrencies.
Yeah, you don't want to be a propeller head, that's for sure. Yeah. Where do you see crypto, Bitcoin, Ethereum? You want to make some predictions by the end of the year?
I always get those wrong. You know, I didn't anticipate the war. I would have guessed wrong on that. I thought it would be an incorrect assessment to create a kinetic war in 2022. So I got that wrong. I didn't assess the regulatory environment appropriately. I thought once you had the Bitcoin futures, you'd end up with the cash pretty immediately. Too much political headwind for that. And so I said last year that Bitcoin would get to $100,000. It did not. It corrected now down to 40 from 69,000. Could it get there this year? Yes. Is it likely to get there over 2 years? I'm very confident of that. But we've got some work to do here from a regulatory perspective. We got to get the markets to calm down a little bit. We've got to get through COVID, but it's not going anywhere. Something that is this anti-fragile, where people rail on it, and it's been in existence for 13 years, and there's a combined $2-ish trillion market cap for all of cryptocurrency. I don't think it's going anywhere anytime soon, Melissa.
Okay, so my last question is the most important one. It has been written everywhere. I've even seen it in the back of a taxi cab that owning crypto can make you more desirable. Do you agree with that?
Well, I hope that's the case. I mean, let me just fix my hair as I answer the question. You know, yes, I think yes is the answer.
Yes. Okay. All right. Anthony, thank you so much for joining us. We really appreciate your time. And for more information on crypto and anything else that you have heard here today, please go to magnifi.com/media. We'll be right back. Welcome back to Magnifi by Tiffin. Today we are talking crypto and the best way to incorporate it into a portfolio. Tim Seymour is CIO of Seymour Asset Management, and Meltem Demirors is Chief Strategy Officer at CoinShares. Welcome to both of you.
Thanks,
You guys have both been pioneers in crypto, but before we get to that even, I want to get your reaction to what you heard Anthony Scaramucci say. Well, let's start with crypto. I mean, he says he thinks it's going to get to 100,000 in the next 2 years. What do you think about that?
Meltem, you want to jump in, or I'll jump in. I think we've seen a ton of volatility in crypto and Bitcoin markets in the last probably 5 years. So the question of calling where 100,000 is the mark, I think the more important dynamic is that prices are moving higher, and that the drawdowns of 20 to 40% seem to be somewhat garden variety. And I think we're going to get into this conversation, the fundamentals for owning Bitcoin. But I think the regulatory, something I also heard Anthony talking about, is the regulatory environment around Bitcoin is something that's actually a friend to the pricing. And despite the decentralized nation and some of the ethos and the existential reasons for wanting to own Bitcoin, and I get it, and DeFi to the moon, but Bitcoin's going higher.
Okay, so I didn't understand the regulatory part of that. You think the regulatory part is going to get worse or better?
I think regulatory is a tailwind. I think it gets better, and I think more regulation means more adoption. I think you're going to see. Look, we know the institutional capital that's been following it, and that's certainly the pool of capital that I feel like I'm close to, and I sit in the middle of. As far as I know, institutional money managers, they want the ability to invest. They want the ability to not have to CYA in terms of what their compliance teams and what the regulators have done yet to give it a green light. I think there's a lot of money. I think there's a wall of capital on the sidelines.
Meltem, what do you think?
Yeah, so I'll go with Howard Marks's advice here. He always says you can name a date, but not a price. Or you can name a price, but not a date. I certainly think the what I've experienced over the last 8 years as an investor in this industry is the lows are higher and the highs are higher. I think if we zoom out and look at Bitcoin in particular, and we look at it over 10-year cycles, what we see here is a market that is very cyclical in nature. In Bitcoin, we go through about these 4-year cycles that correspond with Bitcoin's halving, or having in its inflation rate, its supply schedule. What's really important to note is 85% of all Bitcoin that will ever exist have already been mined. The demand for Bitcoin continues to increase. If we look at daily trading volumes, if we look at the demand coming from the structured exchange traded product side, which is the business we're in at CoinShares. And what's been interesting to note is, again, if we look at investment trends, it's important to not focus on cycles, right? It's important to focus on secular trends. If we look at the secular trend, if we look at what's happened happening with the digitization in financial services more broadly, if we look at how distribution patterns are changing, what we see is no longer just financial institutions who are distributing investment products or financial products to end clients. It's social media platforms, it's apps, it's social trading platforms. So I certainly think we believe in a future at CoinShares where every company in the world will be a financial services company, and the future of financial services looks very different going forward than it did in the past. The investment tastes of my generation, millennials, are changing, and they're very different, not of their parents. We're in the midst of the largest wealth generational transfer in history, right? There's 56 trillion in wealth that will transfer hands over the next 10 years, and people want to invest differently. What's really unique about Bitcoin is imbued with very specific social and political values, which is quite interesting. We have seen a shift with investors wanting to deploy their capital into things that align with their values. We see this with the rise of ESG investing. We see this with the rise of investments in tech companies, some of which, like Tesla and others, resemble religions more than they do companies, quite frankly.
Cults. Yeah.
You know what? Cult religion, I don't differentiate. It's all good for us.
Oh boy.
Yeah. So
let me stop you for 1 second there, because I want to ask both of you guys, if you are a modest investor or you're someone who's pitching to a modest investor, in 1 minute, how do you explain the value of investing in Bitcoin? Why must you do it? Tim, you go first.
Well, I'll just point out that part of the rationale and the raison d'etre for Bitcoin is ineffectual central banks around the world. So whether an outright inflation hedge or, again, think of the unfortunate global scenarios that scenario that's playing out in Russia, Ukraine, and think about the fact that probably appropriately the US, the UK, and the EU said they're going to freeze $300 billion of central bank reserves for Russia. Look, that's what should happen in what's going on with this crisis. I get that. But if I'm another country around the world, then I see the autocracy, the ability of the reserve currency central bank of the United States or the EU or the Bank of England. Look, that concerns me. So I think this is as much, and by the way, that's all very dollar negative in the longer term. And we can get into macro and how we're going to finance the U.S. deficit. But I think this is all an argument for Bitcoin, and okay. I think it's all an argument for why the investment thesis here continues on.
So Meltem, it's basically that central banks and governments around the world are run by propeller heads, as Anthony Scaramucci would say. What's your 1 minute argument?
Yeah, it's actually 10 seconds. Bitcoin is an antidote to chaos and institutional incompetence that you can own in your portfolio. That's it.
Wow. That was
What's
good
a propeller head, Melissa?
I don't know. I'm going to have to go back and ask Anthony. It's something that he's not, apparently.
Of course.
Yeah.
I'm
who knows?
People with the little hats, like with the little hat with the thing on top. I don't even know. Is that what that is?
I don't think Anthony
he's dating
would.
Himself. He's dating himself.
I don't think he'd put anything on his head that would mess up his hair. And I might not either, for that matter.
Great point. All right, Meltem, let me ask you. So CoinShares does both passive and active crypto investing. What's the difference, and what makes the most sense for whom?
Yeah, absolutely. So there are very different styles of investing. Passive investing is all about providing exposure to the market beta of crypto and crypto assets. So what that means is investors may, for example, just want exposure to the change in price of Bitcoin. So our Bitcoin ETP is a perfect product for them. It's a product you can buy through your existing brokerage account. You stick it in your portfolio. You don't need to do anything differently. You don't need to open an account on a crypto exchange. You don't need to get a wallet. You don't need to do anything. All you do is enter a ticker, and all of a sudden you have exposure to Bitcoin's market beta in your portfolio. So that is a passive product. There are also indices that we build that are passive in nature, whereas active means that we're actively changing the composition of the portfolio to reflect changing trends in the market. On the active side, we've seen a lot of demand, not only for baskets of crypto assets themselves, but also for baskets of companies in the equity space that derive their value from crypto activities. We have a crypto economy ETF effectively that tracks blockchain equities. Today, there's over $100 billion in market cap in publicly traded crypto companies. We're one of those. We're publicly listed, but there's Coinbase and a number of others. And then the other trend that's been really exciting on the active side is new opportunities to generate yield. So this is more appealing to debt investors using these new debt markets in the decentralized finance or DeFi space. And then obviously the sexiest thing ever, seeing an absolute explosion of capital inflow inflows, venture capital. Everyone wants to be in early stage tech. It's where the returns are. So there's venture capital like early stage investing in both digital assets or tokens themselves, as well as companies that are building the infrastructure, the picks and shovels of this space.
Tim, don't worry about hurting her feelings. She can't hear you. What did you think of those ideas?
I said, wow, when I heard sexy. Look, we're all here on Magnifi TV and trying to, have an interesting afternoon. What I heard her saying about investing in a emerging asset class is really smart. I'm someone that's been investing in emerging asset classes for most of my career. I was an EM investor. I ran a long short EM fund. I lived in Russia at one point. I've spent a lot of time. I'm an investor in cannabis. And what I see in new asset classes is that, first of all, active management is highly effective. These are still inefficient markets. I think they're let the professionals do the active managing and let them manage it for you. I think there's a case to be made here that this market will continue to become more efficient. I do think that there's a thematic approach you want to take to investing in crypto, and therefore passivity is part of where you really want to be, because I think the market will evolve with you. But this combination of being a passive investor but being tactically active, I think makes a ton of sense here. And I think investors have seen where Bitcoin started out to be really the only way to play. If we were having this conversation only 3 years ago, that probably would have been the extent of the conversation. Right. Obviously, people know all about Ethereum. I think all those folks watching Magnifi TV, I worry about all the NFT deals you're seeing. And I think you should be better off investing in Ethereum or Solana or proxy plays for something similar, because I that's the part of what we're talking about today that I also think we could wave a caution flag around.
Yeah. Meltem, I mean, as long as we're talking about calculus, what do you think is the better play right now? Is it owning the asset, or do you want to go with one of the derivative plays? And what would that be?
Look, I think that's so dependent on your risk appetite as an investor and how much time you want to spend on this. I think the challenge today is owning a passive basket of assets or owning exposure through a structured product is a great approach for a family office and investor who doesn't want to change their operational infrastructure, their processes, and create new accounts, manage assets in new ways. There is a bit of a learning curve when it comes to active management in this space. You do want to have someone who's experienced in this, who understands the landscape. As Tim alluded to, anytime there's new technology, there's high utopianism, which we have an abundance of in the crypto space, but there's also high grift. There's a lot out there that really has very little merit, that is really about optimizing for outcomes for the founders of these projects. These projects don't have longevity. And so an active manager can help you avoid those pitfalls. But it's important just to be very cognizant of your investing style, your own appetite for risk, your own appetite for volatility. There's some investors we work with who are very uncomfortable with volatility. So perhaps for them, having exposure to venture category where they're locked up for 5 to 7 years, where they're not subject to this constant market is a better exposure strategy. Some people are very uncomfortable with the reputational risk associated with some of these potential situations where we do have this grift. And perhaps for them, owning a basket of well-established, widely traded currencies within a structured product wrapper issued by a reputable, regulated financial institution is a better way to go. So it really is a subjective question. There's no prescriptive one-size-fits-all formula. It's really, I think, a product of how you operate, what your comfort level is with engaging with this new asset class and all of its different sort of channels through which you can get exposure. And then lastly, just really thinking about what you either individually or as an organization have the capacity to actually do on a day-to-day, month-to-month, year-to-year basis.
No, that's a great point. And Tim, kind of along those lines, where are you seeing value right now that's not crypto?
Interesting. Well, first of all, I think one of the rallying points around crypto and what we talked about with the ethos of a world where central banks may have lost control, there is chaos, as Meltem pointed out. I think hard assets are clearly a place where people want to be. And as someone that's invested again in different cycles of the commodities world, this is clearly a place where I think we are seeing hard assets, but resources and that trade, it continues to be a place that's very interesting. This isn't just about supply disruption from Eastern Europe, and everyone's heard the math, the numbers around the Ukraine is basically the 4th largest net commodity exporter. This is a case where think of the structural underinvestment that have gone into copper mines and gold mines and iron ore mines and frankly, the villainization of certain parts of the commodity chain over the few years by multiple administrations. I think you've left us with a place globally where commodities and again, if you've traded commodities, these are long tail cycles. Well, guess what? It's really been, the last commodity cycle started in 2002 and kind of actually went through the crisis of 2008 and actually caught some fresh life through 2011 or 12, but ultimately really died there and left a lot of investors holding the bag. And remember, again, a lot of these companies were run for bondholders, for the owners of the companies themselves, not for equity shareholders. What you're seeing in equities, especially in the energy sector, and I think in the resource sector now, is these are companies that are actually run for equity investors because they have to be, because we're not falling for the drill to infinity anymore. And that growth with a balance sheet that doesn't make sense is something that works. So again, I like PGMs here. I think gold is going higher. I think people have been shocked that gold hasn't done more here. And frankly, I think look at the 3-year chart on gold. It's also been volatile. But gold is a store of value. Gold is the ultimate inflation hedge. And yes, I believe inflation is going to be higher for longer, and we could have that whole discussion. But no, it's not transitory. Services inflation, which is ultimately a great thing when you think about the labor force and where lower to middle class folks are finally getting a living wage. Well, there's a major delay in what that means in terms of the inflationary impact of that. This is perfect for gold. And I think gold is where central banks are diversifying. I think they are diversifying in Bitcoin and other crypto. And I think that's something that we need to think about.
All right. Real quick, I want to get some predictions from you guys about year end. You can pick a commodity, or if you want to do crypto, just give me a good prediction. Meltem, what do you think?
Yeah, I have 3 sectors I'm looking at. The future of the digital world, which we are on screens from the moment we wake up to the moment we go to bed, and in our sleep, we're being tracked by digital devices. It's about 3 material inputs. Number 1, energy. While Russia and China were putting nuclear on the grid, in Western Europe and the US, we were stressing about replacing straws with paper, which is preposterous. Our administration has been completely incompetent at investing in nuclear and renewables at scale. So I think energy is overdue for probably at least 100 trillion of investment over the next decade. That's a sector I come from. Number 2, computation and connectivity. 97% of the world's connectivity still runs through cables. Those are huge cables that run under the ocean, that run under land masses, hugely susceptible to disruption via hacks and physical attacks, which Russia has been doing with their submarines. We need better infrastructure for computation. 75% of semiconductors are manufactured in Taiwan, which is a small sovereign island whose sovereignty is being contested by China. So we desperately need to have North American chip fab on the map. You can't build that in a year. That's a 10 to 20 year cycle. It involves defending intellectual property and actually putting manufacturing jobs in the United States of America. You cannot build a single electronic device without a semiconductor. It's already impacted the automotive industry, and automotive stocks is going to impact every sector over the next 2 to 3 years as we see semiconductor supplies under severe political pressure. Yeah. And then the last is crypto, the backbone of all of this. All of these markets, all capital markets, in my view, in the future will run on a global settlement medium called a public blockchain. They will trade 24/7, 365 with instantaneous settlement and reconciliation. This is the future we're building for at CoinShares on the trading and infrastructure side of the business. This is what we're investing in. But I think these 3 themes together are incredibly potent. 10-year time horizon on this, but I think for investors who are well positioned, going to be incredibly value accretive.
Interesting. Tim.
Totally agree on uranium. In Germany, holy cow, what bad timing in terms of ending their nuclear program right when Russia is squeezing them. And look, what's happening in Ukraine, the headlines are scary, they're awful. The world is pivoting towards nuclear, and the world, I believe, should pivot towards nuclear. When I think about the dollar, I'll make a prediction on the DXY or the dollar index. I think the Dixie goes to 105 and somewhere between now and late third quarter into the fourth quarter. And then ultimately, I think some of the themes that I was talking about with how the US government, who gave away 25% of GDP in the last year and a half, is going to have to figure out how to finance a deficit. And I think at some point, the rest of the world is not going to do that. I've been in markets for years and listened to people rail against the government, rail against the dynamics here. This doesn't happen overnight. We are still the currency in the world, and I don't want to, I want to kick some of the philosophy with the central bank, but I'm not kicking the dollar. I'm just telling you that some of the themes we're talking about today are ultimately dollar negative. Let's talk about Ethereum. Someone that's long Ethereum and has seen it fluctuate in probably as much around volatility and margin squeezes. And on some level, I think a lot of folks just have de-risked. I think Ethereum's over 5,000 by the end of the year. And again, I think, you're talking about a place where I see institutional adoption and interest. And this is what we talked about. Regulation will allow more investors to invest in Ethereum. And I think while Bitcoin and Meltem talks all about some of the really just the supply dynamics that continue to support and put a floor into the market, I think the demand dynamics around Ethereum and some of the alternative platforms is going to continue to be very exciting for institutional investors.
All right. Thanks to both of you, Meltem Demirors of CoinShares and Tim Seymour of Seymour Asset Management. Please go to magnifi.com/media for more info on anything you heard here today. We'll be right back. Welcome back. I am joined by Gary Kaminsky, former vice chairman, Morgan Stanley, former capital markets editor for CNBC. Gary is also an investor and a board member at Tiffin. Welcome, Gary. Boy, you've known Anthony Scaramucci forever. What did you think about what he had to say?
Well, Melissa, it's great to see you. And yes, Anthony and I go back quite a bit. What I thought was most interesting was the story he told about Amazon and how you can use that relative to thinking about crypto now. For many people, they forget when Amazon first came public, as Anthony pointed out, and I've heard him tell the story many times, there's been huge drawdowns, both on the downside and then huge moves on the upside. And so when you think about crypto as an asset class, it's really changing the world. If in fact, that's how it pans out, the way Amazon did in terms of all retail distribution and sales, it's an interesting way to look at it when one thinks about adding some crypto into a portfolio.
So, in investing, that's half the battle. You come up with a thesis, you decide what your worldview is. Back in the day, the really hard part was then trying to figure out how do you put that thesis to work. If we're talking about, okay, it's a new world, let's put that exact question into the Magnifi search board. This is what I really like about this search bar. So let's put in blockchain exposure for ETFs that benefit from rising Bitcoin. Am I right? Because I feel like that was sort of the thesis that you were talking about. Yes?
Well, absolutely. And so that's what I found most interesting about Magnifi when I first met the company 2 years ago, which was that I reflect back on my career. And if you think back, Melissa, 30 years ago, when I was at JRO Associates at a hedge fund, and we were working on trying to come up with an idea, it could take 2 or 3 days for an analyst to determine which type of investment product, at that time, mutual funds, would be the best way to benefit, leverage something like this. When I type into Google, I don't get investment products. When I type into Magnifi, how do I best invest in an ETF that benefits from Bitcoin rising in value? You actually get specific names of ETF products that are leveraged directly to the rise in value.
Yeah, okay, so we put that exact phrase into the search bar and you could see there are so many ETFs to choose from. They all pop up. It's based on fees, based on returns, based on risk. Let's sort by returns and we'll look at the first 3 and bring those up. Okay, I see ProShares Ultra Semiconductors, Amplify Transformational Data Sharing, and ARK Invest Next Generation Internet. So there you go. 3 ETFs with exposure from rising Bitcoin. What do you think about that? That's a pretty cool way to come up with, you've got the thesis, then you're like, well, how do I do it?
Well, what's interesting about that is when you take a title of an ETF, you're not always going to actually know what's in that ETF in terms of the specific securities. So that's what's fascinating about this, is that the Magnifi search engine is able to decipher the actual holdings in the product so that you can't just make your investment decisions based on the name. We both know there's a lot of marketing that goes into naming mutual funds and naming ETF products. With Magnifi, you don't have to worry about that because it pulls all the marketing noise out. It just tells you exactly what's in the product.
This has to be a huge benefit to investors that are out there looking at how do I put my money to work? To me, it seems revolutionary.
Well, again, it's just a great way to disintermediate a lot of the marketing noise that takes place. I'd be the first one to tell you that Wall Street has a great sales mechanism in place. It's not just the naming of products, it's the way products are sold. This is exactly what Amazon did for going out and looking to buy a product. If you're looking for paper towels, you want to find out where the best paper towels, the best prices. You want to sort it based on when you can get the delivery and what the best recommendations are. That's exactly what Magnifi does for the investment products. So the great content we heard today from Tim, with Meltem, with Anthony, you can listen, you can think about it, and you yourself can go into Magnifi and figure out the best way to participate.
Great stuff, Gary. I want to thank all our guests today and make sure you all visit magnifi.com/media to help identify investments to grow and preserve your portfolio and your client's portfolio. I'm Melissa Francis. Thanks for your time.